Calm seas right now, yes. Okay, volatility is jumping a little bit today, but on balance, it's still pretty low. But as political and policy clouds hover on the horizon, where should investors search for and find safe harbors? The CIO at People's United Wealth Management, John Traynor. Well, $8 billion, you're just killing it out there. Tell us how you're doing that.
Well, we have a lot of loyal clients that make up that $8 billion. But I will tell you, you hit the nail on the head with your initial question. What clients should be focusing on right now is I know the headlines are back and forth on Donald Trump, but they should be focusing on building good all-weather portfolios with their highest conviction names, because we're going to see volatility, whether it's Fed-induced or Trump-induced. We're going to see more volatility going forward.
Okay, I agree. So what are such names that you say can really give ballast to the ship in a safer harbor for a portfolio?
Great. Well, I'll start with the technology name that we've liked. We've followed this stock for quite a few years. It really hasn't done a lot for the last 3 years, but we like Oracle. They finally look like they have a good cloud computing strategy. We're very excited about their future going forward. In the healthcare space, we like Abbott Labs. They just completed the St. Jude merger. They've got a good pipeline now. Last quarter's earnings were very good. So we think Abbott is positioned very nicely going forward.
What's their dividend now? They always had a great dividend, didn't they?
They're about 2.4%.
Well,
so
it's better than a 10-year treasury at the moment.
Precisely. That's sad to say, but that is true. And then on a contrarian basis, the stock that we like quite a bit in the energy sector, which, as you know, has been the worst performing sector in the S&P 500 this year, is Schlumberger. Again, it's a high conviction name. It's a dominant global participant in oil field services. If you want exposure to energy, you should be buying Schlumberger.
You know, this caught our eye, too. You said that President Trump, that people should look at everything, not just the president, but that he's approaching the so-called David Gergen moment. David Gergen, of course, worked for Bill Clinton, but what's the connection there?
Absolutely. We've been talking with clients about this. What we're hoping, we've got fingers and toes crossed, is that President Trump will realize that in most of the situations he's shooting himself in the foot. We can blame a lot of different people, but he needs to get a hold of his administration. President Clinton had the same problem early in his term. He brought in David Gergen, the elder statesman. Gergen got the administration on track, and Clinton had a very successful period.
Great to see you. John Traynor, People's Wealth Management Chief Investment Officer. Markets start the shortened week to the downside. Here comes the closing bell, and the Dow is down about 50. David and Melissa pick it up here for After the Bell. Hi, guys.